The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 26th magnificent Monday edition of the Trader's Edge on the edition of today's opening bell on the Trader's Edge. My apologies there, folks. I'm your host, Steve Perseverance Rhodes. That means we can plow through anything. Of course, we should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a fantastic weekend. Thanks so much for joining us. If you're up in the Northeast, be careful out there. I guess a huge snowstorm is on your way. In fact, it's probably too late to hop on the road and come on down to Florida, but the weather is just a tad warmer down here. Now, folks, let's make sure that you and I, that we do everything we can to have an extraordinary week. Of course, the easiest way to do that is to always remember that life happens for us, not to us. And when we live by that one little principle, that one little shift in words, it means that you and I, that we can find the gift in every set of circumstances. Of course, today, we're going to go take a look at the circumstances of the markets out here, and I am grateful for your presence here. Of course, I'm here to serve you, and that means maybe, if you'd like me to serve you, just give me a call at 877-927-6648. Together, you and I, we can go take a look at any stock chart, any commodity chart, any currency chart, because a chart is a chart. Because we're technical traders out there. And that is the beauty of what it is that we do here at TFNN each and every day. Of course, this is Magical Monday. This is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show right now. Dow futures are basically flat. They're off 6 points, trading out at 17,581. Well off their session low last night. As the markets open, you got the Russell 2000 up a point or so. The ES Mini is flat at 2,044. Nasdaq's up about 4 points at 4271. King dollar up about 12 pennies, 122 ticks, trading out at 95.17. We've got movement in the currency market. We'll take a look at that. We've got movement in Goldilocks. Gold is back $8. It was down to 17, 18 bucks earlier in the morning. It's trading out at 12.84. Silver's down 19 cents, trading out at 18.11. Light sweet crude off 21 pennies right now, trading at 45.40. Let's take a quick peek across the globe out here. That's worked out in the past to kind of help us, at least lately, to help us get a feel for what's going on. So let's start off with what's going on over in Germany and in London. Let's take a look at the DAX out here. The DAX has been strong like bull. The DAX has got an A to B equals CD pattern that it has formed. The A point is all the way down here on October. Well, yeah, it's the October 16th low. In fact, that's really the A point of our A to B equals CD to the upside out here. The B point is, in this case, December the 5th, and the C point down here, December 16th. The 1-1 A to B equals CD for the DAX price projection. 10,957. You're trading at 10,752. Quite frankly, there's no reason for the DAX right now to make its next targeted move up in the 11,429 area. No bears have been in place inside of the DAX for quite some time out here. So the DAX looks strong like bull, and that bodes well for our markets as well. If we take a look at the FTSE out here, it's back 5 points. Of course, we know that the FTSE is trading much more like our Russell 2000 with big, huge, long-term consolidation pattern. Looks like it's probably right around that 6,900 level. You're at 68.27. The FTSE itself has an A to B equals CD pattern of its own. It's already made the 1-to-1 A to B equals CD. It did that on Friday. Today it's trading just sideways to, I don't know if it took out the highs from Friday. Let's see, 68.41, 68. No, it hasn't taken them out, but it will, and it'll make its way up into that 69.04, probably spike 69.43. Quite frankly, I believe it's going to be the FTSE as well as the Russell 2000 that really are the key charts for us to pay attention to as to whether the markets are truly going to break out. Because if those two take out their consolidations, their large consolidation patterns, and from a move standpoint, what you look at is when you break out a consolidation, your measured move is equal to or greater than the consolidation area. So that's really those two indices that we really want to be focused on as price gets up into those levels. If price gets up into those levels, which I believe that it will. If we take a look at the Shanghai out here, the Shanghai up 32 points last night. Shanghai is strong like bull. This is the index that last Monday gapped down about 7, 8. Well, ended up finishing down about 7% out here, and she is back up at its highs. Did not take out its highs from the but it will. It absolutely will. There's nothing here to stop the Shanghai. If we put this on a longer term time frame, let me put this on the monthly. Let me see the monthly out here. I believe it's the monthly chart. Yeah, it's the monthly chart. That's also, I guess there's going to be a key here. If we take a look at one world markets now, in the case of the Shanghai out here, once it breaks through, well, I could have probably moved that right. Let me just move that right to about back here. We can see that this thing has really been trading in its own version of a consolidation since 2008. So if we can take out the June 2008 high, 36.55, that will bode very well for the Shanghai composite out there. If we take a look at the Hang Seng last night, 59 points, up about 0.25% out here. It too back up at its highs. Just been making basically higher lows out here. So this index looks pretty good. It's just trying to clear a little congestion area right around the 24,923 level. Once it does that, what it really wants to do is it wants to try to get inside its swing point that takes you back into October 2007. This is the monthly. That low is 26,746 out here. So this chart looks pretty good as well. Lastly, let's take a look at the Nikkei, down 43 points last night. Really no big deal out there. Let me clean this chart up out here. Maybe we can take a peek out here. The Nikkei is just simply trying to get back and take out. Let me pull this back here. Let's take a look at its, see where its A to B equals CD pattern might be out here in the Nikkei. Now, this is a monthly chart that we're looking at. So we're looking at some longer term time frames out here. What the Nikkei is trying to do is get up into the March 2000 level. That's right around the 2008-09 area. So as we take a look at forward markets, everything here looks pretty darn rosy. Not rosy, but rosy out here. So let's go take a look at our markets. Let's go check out our rosiness out here, and let's take a look at the daily charts. Let's start off with the Dow futures out here. Now, what do we know about the Dow futures? If you're watching us on TigerTV, and thank you so much for doing that. If you're listening on your radio, your mobile device, we appreciate that very, very much. I'll describe to you what we're looking at. It's a daily chart here for the Dow futures. What we can see is this little descending price channel. Let me actually do this. I'm going to turn off some of the noise. Makes it a little bit easier for you to see. So let me do that. Let me get this tool up on my screen. Let's turn that off. Let's turn that off. Let's turn that off. That off. Let's even turn off the Fibonacci numbers. Okay, so here's a relatively clean chart here for the Dow futures. Now, the Dow has been arguably the weakest of the four primary index futures contracts that we follow out here. But what the Dow actually did, now, of course, when you got IBM, one of the leading weighted stocks that is not performing, that's going to put some pressure inside of the indice. Now, if we take a look at what the Dow futures actually did back on last Thursday, January 21st, they broke through that descending price channel, and they did it with conviction, meaning a wide-ranging bar out there. Now, here's the other cool thing. When you actually break through a line of resistance, and this is diagonal resistance out here, you actually like to see a market come back and test it. Now, if you bought the breakout, you might not like to see it. But from a bullish standpoint, assuming that you used an appropriate stop out there, or even if you got stopped out, that you come back in, what you really like to see is you like to see price come back and test it. So what took place on Friday in arguably the weakest of the indices out here? Guess what price did? It actually came back to test the top of that descending price channel. Overnight action. Was it the result of the Greek elections out there and the potential of Greece pulling out of the euro or whatever it might be? What we saw was futures actually gapped lower last night, traded lower. In the case of the Dow, just as an example, got down to 17,432. You're at 17,581 right now. So that's about 150 points lower than where you're trading right now. So it moved down there. And what it's also done as we speak right now, the day's not over, granted, but what it has done, it's tested and it has rejected this level out here, this level being that descending price channel. So that bodes well. That says that what the Dow futures ought to do is get up to the December 26th, December 29th level out there in the price range of about 18,036, somewhere in that range out there. Now, what is more likely to have happen or occur out here is the A to B equals CD to the upside. So over the longer haul, now I need to turn on my A to B equals CD tool out here. Over the longer haul, what the Dow futures actually want to do is they want to make a move up into about the price point of 19,142. So that's the next move out of here. We just need to see the Dow futures clear their December swing point highs. Once they do that, then this price projection, 19,142, becomes a target. Until it does that, what the Dow is also potentially doing, I'll turn off the A to B equals CD here, is the Dow has really been trading in a version of a sideways consolidation move out here. Default, that's all I wanted. Is done. And if I come back here, and it's just so logical. Sometimes, the mere fact that this stuff works out is just kind of like, really? And when I say logical, is you may remember back on October 31st, back on Trick or Treat Day, on Halloween, it was you and I, we were given a treat. And that treat was the Japanese bank finance ministers. A combination of two things out there. Number one, they were going to go ahead and print unlimited cash. But number two, and even more important, was that the Japanese pension plan out there, which has been behind, so they've got some unfunded liabilities out there. They said, hey, what we're going to do? We're going to go ahead and we're going to change the rules of our allocation formula. And that allocation formula was, we're going to go invest in foreign markets out there. Now, somebody's investing in the DAX. Is it you? Probably. Well, some of you listeners out there it is, because we're an international show. But for most of you, probably not. Do you think maybe, just maybe, there's a possibility out there that the Japanese pension plan is investing in the German market out there? Do you think there's a possibility that's investing in the U.S. market? That's investing in worldwide markets out there? I would say yes. So look, there are natural buyers out here on all of these dips. Is it any wonder that same set of money, that same set of cash, as the market came down on December 16th, it ran right into that blue horizontal breakout area? Now here, this is a breakout where you want to see some real wind at your back, and I believe that's what we have in place here as we take a look at all of the markets. So what do we see take place inside of the Dow futures back on December 16th? Got down into that breakout area there where it was very clear. I mean, it's, you can Google it, or you can search for it. I don't even know, like, why I'm using that word, Google it. Of course, I like to, utilize that search service out there. But you got to be careful what it is you're searching on. In any event, out here, here's the deal. Price just simply pulled back to an area right now. You can really make the. We haven't really seen much in the way of testing up at that 18,000 area, but the bottom of that consolidation, 17,006, pretty well cemented, in my opinion. Price came back, tested another breakout area of a descending price channel. Unless we see the market sell off, and if we do see the market sell off, your price target ought to be that 17,006. So we've got really both sides of the trade out here. You're at 17,580. Price is either going to head down to 17,006 or up to the 18,051 level. I don't know about you. We'll take a look at the currency market out here, but everything I'm looking at, it says it's headed north. But the markets don't really give a darn about what Stevie thinks. What do you think? 877-927-6648. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 8 points right now. S&P is flat down a half a point. So we spent quite a bit of time there taking a look at the Dow futures. What I would say would be the weak link out here. Let's go take a look at the strong link. The strong link being the NASDAQ. Now, as we take a look at the NASDAQ right now, trading out at 4270. Let me turn off a couple of things on this chart as well. So let me get the tool back up there to do that, because we can always turn them. We can always turn them back on. So I'm going to turn this off. I'm going to turn off the retracements here just for a moment. Okay, so now we actually have up on our screen is we've got this is the daily chart here for the NASDAQ futures. I've got the descending price channel that this broke out of. Now, price really never came back to test it. Then we might say that, hey, it actually broke out on Wednesday last week. We saw a little bit of a pullback after that. And so price, I'm going to call it close enough to a test for us out here. Friday's action, where the general market, not the general market, well, the New York Stock Exchange, the Dow, I think the S&P traded just slightly lower as well. Coming into the close out here, the NASDAQ futures actually traded just a tad higher out there, basically a doji style candle. Now, dojis at resistance, they have a lot of meaning, but resistance is really the swing point from December 29th. That low has not been hit, 42.98 and a quarter. That low will become the next target out here for price, and it'll also be, as I mentioned, the FTSE in London is something we want to pay attention to. Of course, we want to pay attention to everything, but the FTSE and the Russell 2000 We want to look at those because we know they're long-term consolidation levels, and so that will help us. A real breakout, they're not going to drag the markets higher, but they certainly can have an impact on pulling things down. They can be the pity party out there, and we don't want them to be the pity party. We want to see them actually break out, and we want to see them break out in 2015. And the reason is because the low that's being formed as we speak right now, which I believe was not last Friday, but the Friday before out there, is the low for 2015. Yeah, the low for 2015, at least for many, did I say many months to come out here. So what's going to be what's going to give us some certainty, add to that certainty? Because I can't guarantee that prediction out there, but I do believe that is the case. But what will provide to that certainty is a breakout of those consolidation patterns. Now, what we'll also watch for is what's going to happen with regard to strength. What's going to happen as the December area gets hit inside of the NASDAQ. So what's likely to take place is that A to B equals CD to the upside inside of the NASDAQ. And it's a doozy out here because if the A point, which I believe that it is the October 16th lows out there, those major lows, and the B point happens to be the November 28th high, the C point here for the NASDAQ, this took place on January 16th. That was not last Friday, but the Friday before, as I believe the market has made its low for 2015. That gives us a price target of 46.96. But quite frankly, the way that this is trading out here, what the NASDAQ will actually do is try to get up into the 48.75 level. Now, we won't know that for sure. Of course, we'll never know that for sure until price gets up there. But what we'll use as a real good clue out here is going to be that November 28th high, 43.42. So if we see a move above that, then we're likely to see 46.96, 48.74. And don't expect it to be a straight line move out there. There's going to be a lot of folks that just won't believe it, just don't believe it, and for a good reason. I saw somebody post, my screen inside the den is pretty narrow because of all the activity I've got going on my screens out there. But as we're coming into the last show, and I don't know who posted it, my apology, but I just saw a posting there that said IBM might be laying off 100,000 people or so. I don't know if that was an actual thing or not. But the question was, is that good for the economy? And it's not great for the people who get laid off for their economy. That is for sure. And is it a good sign about the economy? No, of course it is not. But what's really going on inside the stock charts? So two different things out here. So if you're tuning into the show, you're tuning in the show to say, hey, technically, what are the setups here in the market? If you're going to tune into my show, I'm going to take a look at both sides of the trade most of the time. If I forget to do that, all you got to do is just hit me upside the head, and then we'll go back and do that. So we've got some really good benchmark areas for us to be paying attention to really give us a gauge as to what will unfold. So we know that the NASDAQ broken through its descending price channel. We're going to go ahead and get rid of that. We don't need to use that any longer. That is done and gone. And at this stage here, price is above its daily profile high, its market profile high. Took that out on January 22nd out there. So all things point north inside of the NASDAQ. We get back from this next break after the markets open. We'll go ahead. We'll take a look at what's going on inside the currency world. We'll certainly take a look at the euro, Japanese yen. That's fending off the bottoms out here. The euro as well. We'll go take a look at some shorter term charts as well. You've got gold trading off about $9 right now. I can tell you that the commercial traders have really ramped up their net short positions inside gold. And when it comes to silver, oh my goodness. So if we're wondering why gold and silver are struggling here, there are big money players that are calling at least some kind of short-term top in the not-too-distant future. This is Steve Rhodes. Maybe it's already here. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 54 points, trading at 17,620. S&P down 6 at 2,045. Composite down 13 points at 47.44. Russell 2000 off about a point and a half, trading out at 11.87. You've got gold down $9, silver down 15 cents. Light sweet crude up 15 pennies out here. Lead the charge to the upside. Midwest Vaco Corp. That's up 6.5%, up 14%. Universal Display Corp, OLED. That's up about 20% out there. That's a nice move. Rock, Tennessee is a little rocket. RKT's a ticker symbol up 7% this morning, up $4 and change. Shire PLC up $4 and change. IBM up $2.70. Regency Energy Partners up about 10%, up a couple of bucks right now. To the downside, you've got Western Digital. WDC is the ticker symbol off $5, down about 4%. Brookdale Senior Living off 11%, down $4. Seagate off $4.50. Visa down $3. Norfolk Southern down a couple of bucks. Mattel, the toy company, off a couple of dollars out there. Let's go take a look at the currencies, and we'll come back, take a look at these stocks. We'll take a look at a couple of other things out here. If we take a look at the euro, let's go take a look at the euro. Let's just go take a look at, we'll use this here, even though we've got a 10-minute delay. So as we take a look at the euro, as you know, at this stage of the game, Let's do this here. Let's come back. Let's take a look at the weekly chart. Let me I've got the weekly. The euro hit its weekly swing point price objective out here. That was the A to B equals CD to the downside. If you watch us on Tiger TV here, I'll scrunch it just a little bit. No, I won't. I'll just pull this down. So you can see the longer term A to B equals CD to the downside that it hit. It did it almost to the pip on Friday out here. This is a weekly chart that we're taking a look at. So we'll go take a look at the daily. What do we not like about this? Well, we don't like how it hit this with the two widest ranging bars over the last couple of weeks. Nonetheless, that price objective was hit. And you've got price being extremely oversold on a weekly, on a monthly, on a daily out there. So now what we could be seeing is just simply a counter trend, a little counter trend rally out of an extremely oversold market. Now, we can change our opinion if we start seeing the cavalry arrive out here. And thus far it hasn't. Now, with regard to what went on over in Europe, somebody's buying the euro. Now, is it short covering? No, I wouldn't say it's any short covering, anything like that we see out here at this stage. The short covering, we'll start seeing those wide-ranging bars. We'll see some quick up-thrusting moves out there. But at this stage of the game, the bulls have not arrived, but we're close enough to where it would make sense. Hey, if you wanted to trade the euro to the long side, all you got to do is put your stop underneath last Friday's low out there because of the longer-term 1-to-1 A to B equals CD price objective that was hit. If we take a look at the short-term charts out here, just to help us identify whether or not there's any kind of potential change in trend taking place, here we'll take a look at a 10-minute chart for the currency pair. At this stage of the game, you've got your first A to B equals CD pattern off of this morning's low. It was at last night, I should say, was at 1850, so 650, about 7 p.m. out there. So we've only seen one A to B equals CD pattern to the upside. Nothing really huge at this stage unless this pattern continues. It actually made the 1-to-1 A to B equals CD. It did that this morning at about 4:30 or so. Looks like 1.1286 is the target here for the 1.272 A to B equals CD to the upside. If we take a look at your favorite currency pair and mine, that would be the euro Japanese yen. Now, the euro Japanese yen, this has the potential of actually forming a bullish reversal signal. Right now, you've got a little piercing candle that is present, bullish engulfing candle, if in fact you see it close today above 134.64. This is the currency pair that tracks the U.S. stock market better than anything else out here. So from a bearish standpoint, you don't want to see the bulls arrive inside this currency pair. From the bullish standpoint, you most certainly do. Of course, it's got a little bit of a trend line out here. In order for this to really change its trend, it's got to take that level out. But one thing at a time. Right now, it's made a 1.272 expansion of its last set of swing points. That's the low from October 16th out to the high on December the 8th out here. So it made that price objective earlier, late last night, or not too late last night. And then it started moving off of the lows out there. If we take a look at its 10-minute chart, just to look for some A to B equals CD pattern, of course, we're going to see some out here. Looks really similar to the euro itself against the U.S. dollar index. Let's go take a look at the Great British Pound. As long as we're inside the currency market out here, let's go see what we've got going on out here inside of the Great British Pound, trading out at right around 1.503. This actually does have a bullish reversal signal here this morning, but nothing, a bullish engulfing candle, but then Friday, the body of that candle was fairly narrow. So it doesn't take much to create some type of bullish engulfing candle out here at the 1-to-1.272. A to B equals CD to the downside. It'll need some additional follow through tomorrow to say that this pattern could potentially be over. Of course, all of that little weakness that we have seen inside the currency market has been putting some strength inside of the U.S. dollar index. U.S. dollar index trading right around the 95.26 level out here. That is at the 1-to-1.618 A to B equals CD to the upside out here. If in fact it does not hold this level, 97.87 would be its price projection out there. Let's go take a look at a couple things that are moving and grooving in the markets. Let's look at a couple of things moving to the downside. Let's take a look at Seagate Technologies. STX is the ticker symbol. Down 8.5%, gapping down this morning. This has created a bit of an island out here. So not necessarily a good scene for Seagate Technologies. What I mean by an island is if you take a look at the trading session that it had on October 31st, if you caught the opening of the show, we were talking about that October 31st level inside of the markets as kind of a fairly decent stimulus signal, a little bit of a breakout area. Well, in the case of Seagate Technology, it had gapped up on October 31st with 5.9 million shares. Now, this morning, we've already traded 1.5 million shares, and it's gapped down below that area. Well, what Seagate Technology never did was test this gap, and therefore, from October 31st up until Friday, January 23rd, what it created was a bunch of traders that are now stranded on an island out there. So and an island reversal, and this looks, let's at least at the 52-week high levels. This is at all-time highs out here. I can't believe it's at all-time highs, but let me just confirm that. Okay, now I believe it. Well, at least going back into the 2003 timeframe, 2002 timeframe out here. So how about that? So you've got Seagate Technologies at all-time highs with a huge island reversal. That means if price does not get above $61 today, that is the bottom of that swing point from October 31st. You've got an island, one of the most bearish reversal signals with some volume off of that as well. That would say, hey, at a minimum, you ought to see Seagate Technologies target the October 15th level. 5.4 million shares down there at a price point of about 50.44 to 52.75 or something like that out there. What was it? 52.75. That is on Seagate Technology, leader in the clubhouse to the downside. You've got Western Digital out here, so the hard drive manufacturers are struggling here this morning. So you got Western Digital down about 5% off 550. It too gapping down, but no island inside of it. That doesn't mean that this is not a bearish looking chart. Let me see here. What do we have? Volume of 450,000 shares so far. Taking out a swing point out here, a B point, which only has 1.8 million shares. So we take a look at where this is likely headed to. You got really two A to B equals CD down paths. Let's look at the most current one out here. That's the one that starts with the high on January 9th, the low being January 16th, and the B point, I say the low, the C point being right around the January 21st level. So you got 96.52, 93.59 more likely is the target for Western Digital, just as a quick look-see. If we look at also moving to the downside, let's not spend any time here on Google. Let's take a look at Brookdale Senior Living, off 10%, down $3.70 out here. Expects 2005 cash from facility operations per show. It's out with their numbers. I don't see what the full numbers are, but nonetheless, this thing gapping down this morning and testing, well, very close to testing the October 15th level. That has a volume of only 1.6 million shares. You've done 1.5 million shares. Hasn't been tested. 31.22. I don't believe it has. The low so far this morning, 31.33 out there. So it looks like that's up for a test of that swing point. Now, this thing here has somewhat been consolidating sideways, but this should have some pretty decent support at that level. That level, again, being that one, what is it? I'm sorry, the $30.22 area. That happened to be a breakout from back on February 21st, 2014 out there. So that's it's a 32.98, 30.22 ought to be a decent level of support inside of what is this? Brookdale Senior Living. Let's take a look at Lockheed Martin. LMT is the ticker symbol. That is trading down about $3.75, about 2%. I don't see any news on this. Now, this is just really consolidating up here at its highs. Looks like this could Friday could have been the all-time high. Let me pull this back. I can't tell whether it's a 52-week high or an all-time high. The only way for me to do that is put this on a monthly chart. I'm gonna say at this stage, well, Lockheed Martin is at all-time highs out here, so no problem. Let's go back to the daily chart out here. It's been a strong-looking stock chart this morning, though, gapping down just slightly. Volume behind the move of 203,000 shares. Let me see where this might find its next level of support. Been in a little bit of a trend out here. Looks like that trend is under attack this morning. That's coming off of the October 20. No, it's not. So here's where you figure Lockheed Martin is probably, whoops, come on, don't do that to me. Don't make me draw the lines over and over and over again. So here's the trend line for Lockheed Martin. If Lockheed Martin can hold that trend line, that would be bullish. If it can't, and we also want to take a look at what's it doing as it comes into January 6, 1.2 million shares. Now, it's coming in there with a bit too much volume. We're already in 210,000 shares. Nonetheless, there's the short-term trend for Lockheed Martin. I do mean it is just a short-term trend, because a longer-term trend is probably much, much lower with regard to a price point objective. Let's take a look at the Dow's off 88 points right now. S&P is down 9.5 points. Composites down 20. With regard to the futures market, let's just go back and take a look at the futures market. Out here inside of, you're about the midway point really from where it was in the morning. Let's come back and take a look at, meaning early or late last night is really what I should say. Let's take a look at some things here that are moving to the upside. We'll do that for the next several minutes. Let's take a look at, well, how about that? West VACO, but it's really Wynn Resorts. So I say, how about that? We'll go take a look at Wynn Resorts because it's got that island bottom reversal pattern out here. Nonetheless, 16% to the upside so far this morning. They're out with their numbers. Midwest VACO, is that? Okay, I got it. You got Rock, Tennessee, and Midwest VACO agreed to combine out here, so that's really what's moving that equity. Well, then let's go take a look at Wynn Resorts, because that's not what's moving the equity out here. I don't see any numbers behind Wynn Resorts, but maybe it's the stock market in the Shanghai and the Hang Seng that are saying, hey, it's not too shabby out there, not too bad. Here's your island bottom reversal candle inside of Wynn Resorts. That took place on December 17th, 4.2 million shares down there. Right now, you got Wynn Resorts, 272,000 shares to the upside. Moving into December 29th with 1.5 million shares, so it's now starting to take on some swing points with some pretty decent volume here this morning. We've only been trading for 16 minutes, so looks like Wynn Resorts may in fact be off of its bottom. Of course, the easy trade here is just placing a stop below the bottom of that island reversal candle from December 17th, and that's out at 133. 58. WINN is the ticker symbol there. Also to the upside, we've got Universal Display. OLED is the ticker symbol, gapping up this morning. What are they announcing here? Let me see. What is it that they're announcing? Delighting its Universal Technology Materials. Announced a sign of a new LED license agreement. Okay, so they've got some type of new agreement. Nonetheless, this thing is moving to the upside. Let's go see what this is running into. So a nice move here this morning. Good volume behind the move, 788,000 shares. That's moving into a swing point high that had volume. So no reason for this to not visit that area. Now, the thing is, it's coming into that swing point with volume. So that was a high volume-ish type swing point, September the 4th, 2014, at 2.7 million shares up there. The bottom of which is 34.86. You're trading at 30. Is it bottom 34.86? Yeah. It is 34.86. So you're not there yet, but I would expect that OLED ought to at least go tag that and maybe even test the highs and even take out the highs, 39.72. But this ought to, since it's moving to that swing point with volume gapping up, that is most likely what we will see OLED do out here. Also moving to the upside, let's see, what's something that we have not, what is PII? It says New York Stocks. The heck is that? It can't be. And I think I got something. There's something wrong with the name that's on out there. Let's take a look at IBM, though. You got IBM up $2.70. Out here doing its share to try to help hold up the Dow out here. But let's take a look at IBM. We know IBM was down with some volume out here on January 21st. It was 11 million shares going into 7 million shares from December the 16th. Nonetheless, it has cleared that level. IBM so far up this morning with 1.2 million shares out here. That was after being down with only 12 million shares. So I don't know if volume will keep up inside this equity or not. But in the case of IBM, it's got some fairly stiff resistance at about the price point of 170.33. Right now, we got the Dow off 90 points, just about. The S&P's down 10, composite off 22 points. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off about 60 points right now. And for all of you listening in that are going to be in the weather-affected areas, it's been a long time since I have driven on icy roads out there. Grew up in the Michigan area, in the Detroit area. I remember one evening, well, it was early morning, probably about 1:30, 2 o'clock in the morning, driving down the John Lodge Expressway and coming up over a little bit of a hill out there. The expressways up in the, at least up in that area, are actually kind of sunken down into the, you've got a lot of land. They're kind of, it's almost like a somewhat tunnelish, if you will. But I remember coming up over a little bit of a hill and seeing cars in front of me spinning out because there was a patch of ice. And, once you hit that ice, you're screwed. Actually, in Florida, I found we've got ice down here, too. It's called getting onto grass. If you've ever tried to maybe swerve off of, if you've ever wondered how a car, if you're driving, well, wherever it is you're driving, somebody who loses control gets into the median and then can end up, getting all the way into the oncoming traffic and the other way. I'm looking at an expressway out there. All you have to do is, and this is where, those people who might text and drive and things of that sort, all it takes is a couple of seconds, take your eyes off the road, slip into the median. If that median happens to have grass and then you hit your brakes, you will go sliding just as if you were on ice out there. I know that from experience, not because I was texting or anything, but because I tried to swerve around somebody in front of me that had lost control, and I went into the median and decided, and I put on the brakes out there, and it didn't exactly, the car kept going. It wasn't stopping out there. So in any event, the message is just be careful out there. Stay in. With TFNN, we'll be with you all day long, so you can tune in here and listen to us. So we'd love for you to do that. But be safe, stay warm out there. And, of course, come visit us. Now, back to the markets out here. We haven't covered metals here this morning, so let's go do that. Let's take a look at Goldilocks. Gold is back $10. I did mention as I took a look at the CFTC Commitment of Traders data, I did notice that the commercial traders have really ramped up their net short positions. They're back to levels where this market has seen highs, and so that's kind of interesting. At the same point that we have seen a 1 to 1.272 A to B equals CD to the upside, that completed at the 1301-ish level, which was also the 0.786 retracement. So it did give us a Gartley sell pattern out here. Now at this stage, if we take a look at areas where this could pull back to, if we take a look at retracements of the A to the D point out here, first level is going to be 1265, and as I say, it would be a nice gift to us. I think it would be a nice gift if we could see a retracement down to about the 1240 level. But at this stage, we haven't even gotten to the 0.382 retracement. That's 1265, 1240 is your 0.618 retracement out there. That's what's really going on inside of gold as we speak right now. Inside silver, the commercials actually have ramped up to an even larger net short position. Oh, I deleted that chart. Man, I hate when I do that. No, I've got to put a new chart up here anyway, so might as well do that. Just unfortunately takes me just a moment or two, and I won't have enough time to do that before the break. I'll do that during the next show. Let me take a quick peek here at the VIX index. VIX index is still trading below the 50-day exponential moving average. That's at 1729. You're traveling at 1713 right now. That bodes well for liquidity. That bodes well for the bulls as well out there. So, folks, if you're off to start your Monday, have a magical day, a magnificent day. Stay warm, be safe out there, and just stay tuned to TFNN. Stay tuned. The second hour of the Trader's Edge show will be up in about 8 minutes or so. If you're off to start your day, have a great one, and I look forward to seeing you tomorrow morning. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.